Well, good afternoon, good evening, or in fact could be good morning to everyone. Welcome to Deloitte's Debriefs Tax webcast series in Asia Pacific. Our webcast today is from our technology series and is titled SAP S4HANA, SAP Document and Reporting Compliance. So my name is P.S. Vallab. I'm a Deloitte Asia Pacific Tax Technology Consulting Partner based in Singapore. I have the tremendous pleasure of hosting today's webcast. I have three speakers with me today from Deloitte and SAP. We have Hariyati Hamza, Madhav Savasararo, and Mike Varias. Hariyati and Madhav are tax directors based in our tax technology consulting team here in Deloitte, Singapore. And Mike is from SAP. Mike is a regional manager in finance risk solutions for Asia Pacific and Japan. He's based in Australia. And you can access all of our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I thought I'd run through very quickly some of the features in the webcast console we have here. So first, all users are on listen mode. If you have any content-related questions, you can submit at any time in the Q&A box at the bottom right of the screen. We'll do our best to respond to your questions during the presentation. Secondly, for all PC users, you can maximize or minimize each box at your convenience during the webcast. You can also explore the icons at the bottom of the screen. If you want to download today's slides and the related publications, please go to the Download and Links box. For mobile device users, you can view the slides and answer the survey on the screen. Finally, if you require an attendance record for this event, you can download a CPE certificate by clicking on the Request CPE icon at the bottom of the webcast console. So can we move to the agenda slide, please? So let me give you an overview of the topics that we're going to discuss today. So we're going to start with developments and an overview of the digital reporting requirements from governments to really paint some context on the technology discussion that's going to follow. Then we're going to provide an introduction to document and reporting compliance, or DRC, as we'll probably keep referring to during the course of today's session. We're focusing on features, including standardization, simplification, efficiency. We'll talk about the extensibility platform, and also the global coverage. Mike will also, as part of his presentation, do a working demonstration of DRC as well from SAP. Then finally, we'll focus on the experiences and lessons that we've learned from implementing DRC from a Deloitte perspective. And finally, obviously, we'll close with any question and answer or question you may have during the session. As I mentioned before, if you have any questions during the session, you can enter them into the Q&A box. So let's get started. And the first part of the session is just an overview of the developments of digital reporting requirements across the various jurisdictions. And maybe Hariyati, I'll pass over to you to go through this topic.
Thanks, Piyush. Right. So today, as you can see, the global landscape of digital tax reporting can be illustrated by the map shown with a variety of types of reporting obligation. So majority of these initiatives are identical, but what you can see is that the lack of standardization between countries is apparent. Reaching a high degree of compliance, increased efficiency, and simplification for both reporting entities and the authorities are important factors in driving the digital reporting initiative. So to facilitate the standardization between countries, the FTA, or the Forum of Tax Administration, has initiated the development of SAFTI, which is also stand for Standard Audit File for Tax, and is aiming at creating a uniform format for the transfer of financial data from taxpayer to the tax authorities. It also enables tax authorities to conduct efficient and effective tax inspection and audits. So multiple countries have adopted SAFTI, such as France, Luxembourg, Portugal, Lithuania, Poland, and Norway. But even though the objective of SAFTI is around standard, countries that have adopted OECD standard for SAFTI have done so differently, both in terms of requirement and its interpretation. Also, in most countries, Invoices constitute primary evidence used to determine how much indirect tax should be collected from the taxpayer. So e-invoicing has been identified by the tax authorities as one of the key instruments for reducing the VAT or the GST gap. What you can see is that e-invoicing has been adopted by several countries such as Italy, South Korea, and Indonesia. There are two most common systems for the tax authorities to monitor e-invoicing, and these are called the post-audit and also the clearance methodologies. The post-audit is quite common in Europe, except for Italy, where the tax authorities audit invoices and the VAT-related data post-execution. Whereas the clearance method implies that the suppliers send the invoices to the tax authorities before or in conjunction while sending invoices to their customers. In hard clearance countries such as Italy, India, and Indonesia, the invoice is being sent to the buyer upon clearance from the tax authorities, whereas the soft clearance country allow the supplier to send invoices to the customer without obtaining the clearance from tax authorities. So if you move to the next slide, please. Yeah. So before the previous slide, we look at what is the current digital reporting initiative. Now on this slide, we can see the snapshot of the expected development in countries from North America to Asia and also to Europe. So the traditional VAT or GST compliance mechanism that rely on the periodic reporting of aggregate data and infrequent tax audit are unable to effectively detect and eliminate fraudulent activities. So to reduce the VAT or the GST evasion, growing numbers of countries are putting mandatory e-invoicing requirement in place for the B2G and followed by the B2B and B2C. This slide is showing the growing trend of the clearance model as a real-time reporting and further tax control by the tax authorities. This model is most prevalent in South America and certain countries in Asia, but it's now starting to become more common in Europe and Middle East. And we can see that majority of the countries, mainly in Southeast Asia, have starting to adopt it. And also you can see that a lot of the Asia-Pacific tax authorities are planning to introduce the e-invoicing from now until 2025, and majority of them are starting with B2G or business to government, what you can see with Australia and as well with New Zealand. So if you can move to the next slide, please. So in recent years, there has been an enhanced collaboration between tax authorities and the OECD working group, which is the FTA, towards common structure for the collection of tax. However, differences in approach, legislation, and local requirement made the broad standardization of tax collection unlikely. Tax authorities themselves have adopted different approaches to optimally perform their function of tax collection and the monitoring, and it can be illustrated here under 4 core approaches, which are e-invoicing, real-time reporting, e-filing, and e-audit. And the difference are according to the response time, which can be from immediate, periodic, as well as upon request. What we can see is that between e-invoicing and the real-time reporting, because both are referring to invoice information being submitted to the tax authorities, is that authorities require to supervise the whole invoicing process by requiring invoices to be delivered through government platform. And then e-invoicing actually require all those e-invoices to be subject to approval before delivery. Now, in real-time reporting, there is a fundamental in how the data being collected and exchanged. It is a movement away from the information being pushed to the tax authorities towards a position where it's now being pulled by them. Moving on to the e-filing. Now, under e-filing approach, it prioritizes the automated process from the source to file and how the reporting can be used for business reporting purpose, rather than focusing on the amount of data and when in time the data should be reported. You can see this is actually accordance to the example in Philippines, whereby it's focusing on the electronic submission of book information, and also in the UK, where there's a Making Tax Digital initiative. Now, the 4th approach, which is called e-audit, is focused on extended and standardized data collection. So through digital standardized reports, taxpayers are required to assemble and file a considerable amount of data on a regular basis. One aim of the e-audit approach is to enhance the auditing and the analysis capabilities of the authorities. So from a long-term perspective, another purpose behind this is to replace all or majority of the business to government reporting requirement in favor of creating a single reporting trail to the tax authorities. So as the reporting environment currently in the state of constant change, as you can see in the previous slide, nailing down a sustainable digital strategy is a challenge, especially for large entities dealing with multiple requirements in several jurisdictions. In practice, this creates the demand for any ERP, and in this case SAP, to make their platform flexible to facilitate the adaptation of the future tax digital reporting. So I would like to now pass back the control to Piyush to continue for the next agenda. Thank you.
Thanks very much, Haryati. That's really a useful summary of the developments from a digital reporting perspective in our region. So let's drill down now on how some of those reporting requirements that Haryati walked through can be addressed directly in your ERP system and specifically within SAP. So at this point, I'd like to hand over to Mike, who will run through an introduction of document reporting and compliance, DRC, as I mentioned before, talking about the features and the global coverage. So Mike, I'll pass over to you.
Great, thank you, Piers. And firstly, I would like to thank the Deloitte team for the opportunity to present today. What I'd really like to sort of explain to the audience here today is what's new, potentially or particularly in the SAP tax solutions that we're bringing to market. And for those of you who are familiar with the SAP tax solutions, you would be aware there are two primary or separate components for managing indirect compliance. And they were, the advanced compliance reporting tool and document compliance. So just like what we're seeing in the ever-changing landscape of indirect tax globally, the need to keep evolving, SAP has also updated the way our customers can consume these particular components. So let me introduce you to the latest new solution. It's called, as Piers said, Document and Reporting Compliance. However, it's only a name change. The fundamental functionality that sits within that particular solution is still exactly the same, with a couple of fundamental changes to the features. And what you can see now is on the right-hand side of the screen, you now have a central entry point for both solutions. So whether you're managing the ACR functionality, or you're managing the e-invoicing or document compliance side, you can actually enter the systems from one central landing place. And this has meant that we've been able to now combine the licensing, if you like, or the licensing approach to a single metric. In the past, there was, one metric for ACR, and there was one metric for document compliance. It made the whole, purchasing experience rather cumbersome and complex and confusing. So now we've come up with a single metric with regard to that. So so that's making it a lot more simple to do business with from that perspective. If we can go to slide 9, please. So thanks. So look, this particular slide is really sort of trying to emphasize there are three main fundamental ways that our customers consume the technology. And these are sort of underpinning everything that we do now with our solution. Firstly, it needs to be standardized. It needs to be simple, and it needs to be efficient. Secondly, we need to enable the ability to extend the functionality, to enable our ecosystem, like Deloitte, to bring to the table their expertise in this particular solution. And finally, we need the ability to support the explosion in global requirements. And you saw that when Moriarty just described the uptake and the digital transformation that governments are now rolling out across the globe. So what I'd like to do now is really just take you through each of these fundamental pillars and where really the rubber hits the road from a solution perspective. So where are you going to get some real value and some real benefits from what we've put together here. So if we can go to the next slide, please. And we'll go to the next one. So that's just an introduction slide. Yeah. So one global solution is really what we're talking around here. So the bringing together of ACR and document compliance under one metric, one entry point. From a standardization, simplification and efficiency perspective, it makes sense to develop a solution that is going to support the worldwide requirements in a single instance. So if you can imagine, if we look at the left-hand side of that screen, if we can imagine trying to manage several different countries with different requirements, different solutions, different systems, you automatically then have the issues around, well, how do I integrate these? You have integration considerations. How do I manage system failures? How do there are a lot more, failure points when you're managing multiple systems. How do you manage the manual, the monitoring in each one of the statuses of those particular requirements? And you get very little transparency. So DRC, or Document Reporting Compliance, works with live data. No extracts, no developments, and it's standardized across countries. And as I said before, it gives one central entry point to monitor every individual obligation. So whether you've got liabilities or requirements in the UK or Latin America or Australia, New Zealand, Singapore, Asia, you have access and transparency to all of that information. And of course, we offer full out-of-the-box security and audit trails on that particular piece. So really, we're taking what used to be a complex landscape and making it a lot more simple and a lot more transparent from that perspective. If we think the landscape that governments is going to slow, the requirement from governments to introduce a lot of this digitalization around tax is going away. I can pretty much rest assured that it's not. It's only going to get bigger, and from that perspective. If we can go to slide 12, please. So I'd like to talk to you a little bit more around what that end-to-end process looks like. So DCR, or SAP Document Reporting Compliance, is an end-to-end solution for all types of mandates, whether that's filing, whether that's e-invoicing, all of that. So, and as a result, it offers the possibility to transform your processes from an end-to-end. So when it comes to the end-to-end, we see heterogeneous setups. We see certain organisations have electronic documents managed with AP, AR. So part of this process is managed by, say, for example, a billing clerk, and others are managed by a GL tax accountant. Other organisations have established new centralised team for compliance. So taking all this into account, that all kind of setup exists, but our solution is flexible to be set up to meet the needs of your organisation. We actually follow an SAP standard SAP role and authorization concept. So those of you who are familiar with that, you'll know that you're able to apply different authorization rules to different roles within the organisation. So it's very, very simple. Again, following the one single approach. So when it comes to the actual process, everything starts with a business document. So that upon the creation, the generation of the electronic document in real time, as these are created, they are automatically processed through the system. And a lot of what we do in these localized areas is take a lot of that necessary work away from you, and we develop and bring to the table the actual requirements that government has laid down for you, whether that's an e-invoicing XML document, whether that's a particular return or a format that needs to be sent. That's all done for you straight out of the box. While this is all automated with no touches, when there's no failures occur, the documents are consolidated into the dashboard, centralizing that worldwide. So we've seen a screenshot of that. So if a failure occurs, the system can be set up to reprocess automatically. So where there's a message that has not reached its relevant, not reached its potential receiver, it can then be regenerated and resent. So there's this failover, measure that the system can automatically redo. When it comes to the actual statutory reporting side, the solution supports it end-to-end with the process fully digitalized in the system, from adjustment controls that no longer rely on Excel. I can't tell you how many customers we talk to that say, I ask them, how do you do this? Oh, well, we dump everything out into Excel, and we massage it. We get macros and all sorts of business rules, etc., etc. No longer do you need to do that and rely on Excel as one of those tools. The solution itself, because it sits in a central repository, enables you to drill down to the underlying data. So if there was a particular issue, you can actually get to the actual source document. And included within that process around the submission, we've also embedded workflows, approvals prior to the submission side of that. As well as embedding analytics, you get these data-driven insights coming through from a fully digital traceability perspective. The same applies to approvers. So if you were an approver, you no longer rely on offline data. And, to my previous example, if you had multiple systems, could you imagine how you would approve, different reports from different countries and different systems? There would be, multiple logons, multiple single sign-on authorizations, authentication, etc., etc. So, we take all that away. So, from an end-to-end perspective, it's really, really seamless from that perspective. So hopefully that gives you a little bit of an overview of the end-to-end process. It is fully digitalized, right from the document creation right through to the submission. And as we've said before, sometimes the submissions, and you'll see this when we get to the demo, sometimes these submissions to the actual government platform, require a manual upload. That is not a constraint of of the solution itself. That is a requirement of the government portal. So if we can go to the next slide, I want to talk a little bit more around the additional couple of components, because when we talk around submission, we talk around two different ways that we do this, right? And I want to talk a little bit more about that in detail. So depending on what your scenario is, and the local legislation, we offer two different ways. So many, and this sort of follows on previously what I was talking about, the manual submission. Many reports still need to be manually submitted. And that's a government thing, right? So particularly when we're talking about submitting it to government. So in these cases, we've enabled the download of the final format. Obviously, we've built that file format in line with the government orders or the receiver's requirements, and you can do that from the dashboard and mail it or download it, log onto the portal and upload it from that, and you'll see that in one of the demos that we do. And you can do that without any need of posting, editing. So in many real-time scenarios, the automated submissions, now I'm probably referring here now to the e-invoicing scenario, is where we're actually, sending an invoice to a vendor. These scenarios can be automated because we realize the technology integration through our cloud platform, right? So, you may own your own instance of the cloud platform or the business BTP, what we refer to now as BTP, Business Technology Platform. And we deliver those standard iFlows. So depending on what your scenario is, we've got it all sort of sorted for you, and it's just a matter of activating the license and configuring the back end systems, and away you go. It couldn't be much easier than that. So so let's just talk a little bit more about the extensibility, because this is where it really gets really interesting. So we can just go to the next slide, thanks. So SAP cannot offer every report in the world, and we saw an example of all of the current landscape. Ariati described, where this whole requirement is actually exploding from that perspective. So of course we'll do everything that we can, but of course we set the standard. So you might want to adapt what we've already built and standardize this to some of your company's other specific requirements. So with our framework, that's very, very easy to do. So we deliver all the artifacts we have ever used to create these standard reports and scenarios. So you decide if you want to create a new report or a scenario, or you want to reuse one. In most cases, in a lot of cases, a lot of this can be supported through the ecosystem. So partners like Deloitte would only be too happy to help you manage that particular piece of work. So we enable you to be able to create these reports, and it's actually very fast. It's actually faster than it sounds with the statutory reporting design tool. So you can build your own report in a couple of hours. So that's how simple it is. So you create the reuse, you adapt the existing report, you configure it, you build the other business rules or integration flows within that tool, and then you activate and use and deploy. So it's pretty quick. Obviously, this is all made simple by the fact that you have one actual single source of the truth. So let's just go to the last slide, if we don't mind, prior to looking at what the solution looks like. We actually provide now, we cover, in excess of 340 reports across the globe that support a lot of those countries that we saw in the beginning. We are very proud of the fact that we are the first market-leading solution providing an end-to-end holistic solution. No other vendor can offer. So that's, and this is something that we're continually developing, we're continually investing in. And as these country-specific requirements come out, we have a total team dedicated to supporting those particular requirements. And, I've been involved in the go-to-market for e-invoicing and some of the other statutory reporting requirements here in Australia and New Zealand. And the support that we're getting is absolutely fantastic from our development team in that space. And we're actually having customers come back to us after trying to do it themselves and say, can we have a look at your solution, please? Because this is all too hard. So that's just something from that perspective. So let's take a quick look at what some of these actual demos or scenarios, what they actually look like, right? So the first scenario I'm going to show you is an e-invoicing scenario. So there's something that we've developed or we're rolling out here or executing here in Australia and New Zealand, but it's very, very similar to the way that you would do an e-invoicing or what we refer to as PEPO in any of the other countries. And the second one will be an example of lodging the Singapore GST report. So in both cases, they are an end-to-end solution or end-to-end demo. So you can actually see the actual creation of the document, where it turns up in the actual cockpit or the dashboard, and then how you can then process that and submit that, or execute that through various other pieces of technology, either through BTP or through logging into the tax platform. So if we want to kick off the first demo, please, that would be great. Okay, so so it kicked off a little bit earlier than I thought. So what we've seen there is actually we've created the billing document, and now what we're doing is posting that. So this is a standard SD transaction, and what it's doing in the background is creating that XML file or that common file that needs to be sent to the vendor. So from that perspective, you can actually see that document's been created, and we can see it's now in process, and we want to drill down and get some more information. We can do that. In this case, we're just going to submit that. And in a lot of instances, whilst we're showing this to you manually, a lot of this would be done, automatically. So from that perspective. So you can see there the audit, the ability to follow the value or follow the process flow. And then it updates the actual document cockpit or the dashboard from there. So when the other side receives it, it goes out through the platform, comes back in, and the person who's receiving it can see that invoice coming in. It can be displayed in machine-readable format and then executed through and downloaded and then integrated with your normal incoming invoice automation tools, whether that's vendor invoice management or whatever. So yeah, you can see here that's now linking that with the purchase order through the automation tool and then going through the GRIR process. So it really does sort of take the manual steps away and automates them and delivers process efficiency. So if we can go to the second one, and that's where we've got an example of how we can support the SAP or the GST report. If we can click that one off, okay. And this is a series of activities that you build within advanced ACR or document reporting compliance, series of activities and steps that follow each individual reporting requirement. So what we've done here is we've executed the run, and it's then told us that we've got 2 steps that we need to maintain within this particular piece. So we can see here that these are the documents it's found. We can look at the header document, and this is in the format of what needs to go to the government. And then we can get the actual purchase order details, drill down, and look at the detail. Because this is sitting on top of your transactional system, you're able to get this real-time functionality. So therefore, then what we've got now is the fact that the actual file has been created. Again, this is something that you could kick off in an automated process. So what's happening now is it's created the file, it's downloaded it. We can now log into the Singapore tax office. And that can all be launched through the actual application itself. Log in with the username and password. And then submit the report. Pretty easy stuff. Obviously, yeah. Pretty cool. And of course, you set these up with specific dates, so the system's continually reminding you when these reports are due. Okay. And then you've got a dashboard that tells you the status of where things are up to. And of course, you know, you could do this for multiple countries. So if you're an operation running out of Asia, you might have a division in Australia, Singapore, Latin America. You'd run all of those specific reports. You know, you'd have visibility of all those reports in one portal. So yeah, so that's very, very simple overview. I'll hand back now to Prius, who can take us through the next piece. Thank you.
Thanks very much, Mike. And I must say, it's quite impressive how things have moved on from ARC to where we are now with DRC. And what I find really impressive is actually that new landing page with all the dashboards. Yeah. I think that's something that's certainly ones that when we're talking to clients, particularly not only from a finance perspective, but also from a tax perspective, having informative real-time dashboards is really powerful.
Yeah.
So I really appreciate that summary and also the demonstration that you went through. So now what I want to do is let's get a little bit more practical and focus on the experiences and lessons learned from implementing SAP DRC. And Madhav, I know you've had plenty of experience in assisting our clients from a tax perspective in SAP implementations when they're obviously moving to HANA. And perhaps you'd like to just drill down on some of the experiences that you've come across from an income tax perspective.
Thank you, Piers. Hello, everyone. Having been involved in multiple DRC projects involving document compliance and ACI, let me share some of the practical examples of how we approach and implement a document and reporting compliance project. There are many steps that needs to be considered for a successful DRC implementation. In most of our SAP projects, we apply an agile methodology. This means that work has to be split into different sprints. This methodology is applied during the design and build, and once the build is completed, we fall back to a more traditional testing cycles. On a high level, we would need 3 to 4 sprints to be considered for the design and build, and followed by a testing cycle. So generally, we can take around 4 to 5 months of implementation time into consideration. When we look at the activities in the first sprint cycle, that is our sprint 1, the key takeaway is to get the technical framework set up as soon as possible, including a connection to the government test portal. New Zealand was the first country within APAC for which direct submission of GST returns to the government tax portal was enabled in DRC. That was in 2021. Last month in March, Singapore also was enabled for direct submission. Australia is a work in progress and should be enabled anytime soon. When we are talking about Europe, there are many countries for which direct submission has been enabled. To name a few, UK is one, and we have Germany and Netherlands, for example. It means that we need to have a connection to the government test portal so as to test the direct submission. Once we have the connection to the government test portal, it should enable us to have a much more accurate testing in the rest of the project. SAP only has a subset of checks pre-configured in the solution, so directly testing files in the government platform will avoid surprises later on in the project. Also, we should be aware that in some countries, SAP has partnered by integrating DRC with some local tax bolt-ons to facilitate issuance of e-invoicing and real-time reporting. For example, in Korea, DRC has been integrated with a local tool called Smart Bill to facilitate real-time reporting. All this needs to be considered as part of the technical framework setup. As you know, that DRC implementation is a cross-stream project, so it is important to assess the impact of every stream and make sure all requirements are clear. For the commercial team, all requirements that are present on the physical invoice will need to be reviewed and included. Think about the terms and conditions or the customer-specific naming of the products. For the finance team, obviously, the tax requirements needs to be included. But logic related to pure finance details like bank accounts or the payment references also need to be captured. We also need to be aware that some supply chain information also is sent to the government. So if any data points have specific legal requirements like e-way bill in India, the supply chain team needs to be included as well. And finally, all the domestic incoming invoices will come in through e-invoicing. As mentioned before, this will have a big process impact, but as the data is coming in a more structured way compared to the paper invoices, there is a big potential for more automation which could be considered in the project. In the next sprint, that is sprint 2, all the basic configuration is done. And the first basic end-to-end cycle should work. For any gaps identified in sprint 1, technical specification should be delivered, and the technical specification would be the basis for custom development. In the next sprint, which is sprint 3, focus should be on special processes. Traditionally, when testing a special tax process, we would focus on tax scenarios with specific exemptions or complex supply chains. In a DRC project, the focus should be on invoices generated through alternative process like a down payment invoice or a rebate settlement, and also invoices with non-standard amounts like FOC flow, free of charge flow, or an outgoing withholding tax flow like TCS, tax collected at source in India, need to be tested in detail. E-invoicing with clearing will also introduce some new process that needs to be designed and tested. The main area of focus here is on the error handling of incorrect invoices. For example, what to do with an invoice that was created but not yet sent? What about an invoice that was sent to the government portal but not yet accepted? What about an invoice that was accepted? And how about handling rejected invoices? All these exception flows needs to be documented and tested thoroughly. In the final sprint, which is sprint 4, all the developments needs to be tested and fine-tuned so that the realized test phase can start with end-to-end test cycles. Moving on to the next cycle. Again, having experienced document and reporting compliance implementation projects in various countries, let me share some experiences and lessons learned. As you know, DRC is a recent development, and it is also a merger of tax modules, document compliance, and advanced compliance reporting. Let me share the experiences and lessons learned separately under its respective headings, namely document compliance and advanced compliance reporting. The first lesson learned in implementation of document compliance is more of a technical one, but important to consider. When we talk about an outgoing invoice, this can mean technically 4 different types in SAP. We have a normal sales invoice, normal SD sales invoice, an outgoing finance invoice, a rebate settlement, and a self-billing processes. If multiple types are in scope of the project, it also means gaps needs to be developed separately for each process, and testing efforts multiply. Also, an important lesson learned from a tax point of view is that every legal requirement that was already in place before the introduction of mandatory e-invoicing, government can now check on a document-by-document basis. Hoping you will get through an audit without setting it up correctly in the ERP system is no longer an option. Some examples that I can think of are requirements on dates like the tax point date, application of an exchange rate where the invoice is issued in a foreign currency, sequential numbering of invoices. Making sure all these requirements are now 100% accurate can also have some impact on your global SAP template or the way certain processes are designed. A down payment process, for example, is often performed outside of the ERP or through a pro forma invoices. This will not work in the context of mandatory e-invoicing. Finally, we need to ensure that all SAP best practices are followed for a successful e-invoicing implementation. Moving on to the next slide. Now, let me share my experiences and lessons learned from implementations involving advanced compliance reporting, in short, ACR. One of the biggest challenges faced during the ACR implementation was on the product gaps. For example, during one of our implementation for a client for country New Zealand, we had to generate GST return at the group level. Since the client had registered for group GST registration, but we were able to generate the GST return only at the entity level and not at the group level. So we understood that it is a product gap, and we worked very closely with the SAP development team to fix it. Next lesson learned is on the tax box mapping as part of the ACR configuration. Tax box mapping will enable the transaction values to appear in the correct box in the appropriate forms for the purpose of GST reporting. If the mapping is not done correctly in the configuration, then it will lead to the report or the GST return being wrongly reported, resulting in the compliance issues, including penalties. So a key critical step is to have the mapping document prepared early for all submitted reports and returns with the tax box mapping configuration and ACR. Also, one of the key lessons learned for a successful ACR implementation is to have the right skills with the tax and SAP knowledge in the implementation team. This will help in avoiding the knowledge gaps, especially on the tax side. In terms of user enablement, reports that have been created by SAP or created in-house will have a unified user experience, meaning the process followed in the execution of the report will be the same across all jurisdictions except the output of the report. Even the look and feel of the output of the report is much more harmonized. Finally, I would like to conclude with a very obvious remark. The more SAP best practices are followed, easier the implementation will be. Specific country requirements like the export license and stamp tax will work out of the box if the standard SAP process is followed. With that said, I hope the practical insights will help the audience in their document and reporting compliance journey. Thank you. Back to you, Piers.
Thanks very much, Madhav. And as you can see, there are numerous practical implications arising from an upgrade to S/4HANA, or in fact implementing DRC, and particularly in relation to invoicing or VAT compliance in general within Asia Pacific. So on that note, I'd like to thank Hariati, Madhav and Mike on a really valuable input provided today. This brings an end to our main format session in terms of the presentation. We now have some time for addressing some of your questions. So if you do have any questions, please submit those questions in the Q&A box in the thing, and we'll hopefully be able to get onto some of them. And I see a couple have already come through already, and perhaps we might start with the very first question, and I might throw this to you, Mike. The first question we had received was, is the SAP DRC primarily covering indirect tax compliance and not direct tax compliance?
Yeah, that's correct, Press. It's an indirect tax solution. So yeah, direct tax is we revert to partners like yourselves to manage that side of the business.
Yeah, and maybe I can extend on. Yeah, I think it does. Yeah. I think maybe I can extend on answering that question as well by saying, while that solution is primarily geared, as Mike mentioned, towards indirect tax, from a corporate tax perspective, there are things that can be done within HANA, particularly in relation to the setup for particularly the creation of certain reports that may feed in to the CIT process. Correct. Now, while it won't do the CIT return itself, okay, there's certain configurations that can be done as well. I have another question, and I think I'm going to pass this to you as well, Mike. And the question reads, I understand document compliance and ACR have been licensed separately in the past by SAP. Yeah. So with DRC, which is the merger of document compliance and ACR, how is this now being offered?
So what we've done here is, obviously in my intro we talked about the simplification of the licensing model, right? So what we've done there is basically thrown everything away and basically said, well, a customer can actually license these two products just on a single metric that represents the number of entities that company is legally reporting on. So it's really, really simple. In the past, it was like number of reports, or it was the number of documents processed, in a transmission perspective. So and that became really complex. So they basically said, well, let's just make it easy. Let's just make it entities, and we'll go from that. And I think that's getting a lot of good. We're getting a lot of good feedback on that. So simple is better.
I'm now going to inundate you with more questions, Mike. It sounds like you're the person to go be answering. I'm going to merge two of the questions together. We've got one in relation and one in relation to Japan. So effectively what they're both asking for Japan and India is the Japan e-invoicing requirements enabled within SAP DCR, and similarly, is DRC ready for GST compliance in India as well?
I believe yes to both of those questions. Yes, I believe yes. I think there might be some other requirements within India GST return. I think there is some other areas that need to be explored in that space, but the preparation, I'm not sure on the submission side of it. I think that's a little bit different. But yes.
Adding to it, yes.
Yeah, you might know, Madhav. Yeah.
Yes. Adding to that, because for Japan, right, e-invoicing is mandatory only from, I think so, October 2023. But SAP is working on that e-invoicing solution.
Yes. Yeah, the Japanese side of it is definitely.
Yeah, and when it comes to India, yes, you are correct. Both the e-invoicing solution and the GST returns, both the GSTR1 and GSTRB, all can be pulled out of DRC. Yes, please, go ahead.
I have another question for both of you guys. Is the SAP usually work, now this is I think more in relation to China, does the SAP usually work with another solution provider to connect with an e-invoicing tax authority portal for the issuance of an invoice? I suspect that's in relation to China.
So can we just, yep, there you go, Madhav.
Yeah. But when it comes to China, I don't think so. SAP is integrated with Golden Tax System in terms of the tax reporting aspects, e-invoicing aspects. But when it comes to, I can give you an example where SAP has partnered by integrating the local tools, right? As I said in my practical examples, I gave Korea as an example, where SAP has partnered with a local tool called Smart Bill, through which the issuance of e-invoicing and real-time reporting is possible.
Thanks very much, Madhav. And maybe I'll move to the next question. It's really pleasant to see that we're going around Asia Pacific. We've got a question on Japan, we've got a question on India, China. Now we hit to Singapore. So the question reads: Singapore's input tax claim requires the company to verify that it has that valid tax invoice before it can be submitted in the claim. Does DRC ensure that the valid tax invoice is available in each input tax claimed by the submitted input tax claim that is submitted to the tax authority?
Yes, it does. That's okay. All part of the setup and the localization of that report. Yes.
Great. Madhav, here's one I think maybe you might be able to answer. Custom implementation was mentioned in the practical implementation section. Is this because there's gaps in DRC solution, particularly on document compliance?
Yes. See, in general in SAP, the object with most of the development effort is probably the commercial invoice. This is mainly driven by the commercial requirements. In fact, all these requirements needs to be replicated in the e-invoice also. But SAP does foresee logic and best practices for many of the XML fields, but the company's global SAP template may be designed differently where it is impracticable to adopt or change to the SAP best practices. So normally we do see custom development in almost every project, but it is not due to the gaps in the solution.
Okay. Thanks very much, Madhav. And we have another question for India. Maybe I'll hand to Mike, or maybe even Madhav to elaborate. And what is SAP DCS in India?
I mean, DCS as in document reporting compliance?
Yes, I think that's what it relates to.
What? Yeah.
Probably need a little more. Maybe.
Yeah, I am too. So, unless Madhav, you've got some insights there.
No, I'm not aware of DCS. Maybe he's referring to. Yeah.
In respect to that question, we might come back to the ask of that question separately in terms of how we respond, and particularly get some clarification on that. So I think we're pretty much running close to time, which is amazing that we actually managed to do everything on time. So that is unfortunately all the time we have for. So once again, Hariati, Madhav, and Mike in particular, thank you very much, and a special thanks to you all as well for being able to join us. We'd like you to encourage you to fill out a short survey that's going to pop up on your screen momentarily, and tell us what you thought of today's program. If you joined us late, this presentation will be archived for future viewing. If you feel others would benefit from this webcast, please share the webcast via the share this icon and have them visit, or in fact have them visit our debriefs website. We can respond, and we will in fact respond to all the questions submitted during the webcast in the few weeks as well. Also, if you have any other questions or comments later, feel free to reach out to me or any of our speakers. We'll be more than happy to talk to you. And of course, please don't forget to tune in to our next scheduled webcast from the Financial Services Advisory Services. That's scheduled for the 10th of May, and it's part of the Financial Services series called Tax Developments in Japan and South Korea. And lastly, from all of us at Deloitte and Mike from SAP, thank you very much for your participation in Deloitte's Asia Pacific Tax webcast today. Have a good day or evening from wherever you're tuned in from. Thank you.